Good morning, everyone. Welcome to another video. Hopefully, everyone's having a good morning. Guys, this video is going to be about the Russell 2000, all right, and why I think you need to diversify into either stocks within the Russell or an ETF within the Russell. So, long story short, you have the Dow, you have the NASDAQ, you have the S&P, you have the Russell, and I believe you even have some other ones as well. So, what are all of these? Well, these are collections of companies that, are within a certain category that meet certain metrics that perform well. So the Russell 2000 is, I believe they're micro caps, and you guys are going to have to quote me on a lot of this, micro to small caps. But anyway, guys, if you look at VTWO, it's had very, very steady movement, as pretty much most ETFs, solid ETFs, have had in history. So if you look at the 1 year, looking really solid. If you look at the overall, just really what you want to see in an ETF, and it pays dividends as well. So now why? All right, because I did look into it. Okay, and this year in particular, in 2026, several firms are projecting that the Russell 2000 will outperform the S&P 500. So potential gains of 20% or more. All right, why? Lower interest rates, right? Small cap companies, right, love low interest rates because then they can borrow more money, they can pay less interest, right? So they also like that. Earnings growth, right? So just the fact that earnings are going to really blossom for a lot of these companies, attractive valuations, right? Some of them not so much, and just a lot of overall tailwinds, right? So if you look at VTWO, currently sitting at $105.65. Yeah. So $105 per share, not necessarily, cheap by any means, but of course, fractional shares, dollar cost average. Expense ratio is very low, and the 30-day yield is pretty low as well. But again, if you're, this is the year for me, guys, of safety. A little bit of risk, but a lot of safety as well. So that's why I'm highlighting companies or ETFs like this. So if you look at the holdings, or even the historical performance, the 1 year is, I don't really like that chart. I want a comparison. All right, so if you look at the holdings, or overall basic materials, right? Boom. Consumer discretionary, consumer staples, energy, financials, healthcare, guys, industrials. These are all going, in my opinion, to really, really boom. All right. Especially with the current administration. So we have a couple of companies that you can see. CRDO, Credo. I saw this company. I'm just gonna say I saw it like at $40, guys. And if you look now, I don't know what's going on. I need to look more into it, but they are taking, a 4x since I first saw them. I'm not saying like, oh, I knew about them before anybody, because obviously they were already $40 when I found them. But the exponential growth is insane. So who knows what can happen in this category, right? You see IonQ, Next Power, right? Bloom Energy. So companies that are pretty well known. But again, guys, the long story of this company, of this video, is to diversify with safety. A safety net that is diversified never hurts. Get into your VOOs, in my opinion. Get into your VTWOs, your VTIs, your IWMs. Let's get some safety going, right? Because a lot of my videos, I'm not sure what you guys do on your own, but a lot of my videos are over specific stocks, right? Where ETFs kind of create that safety net with a lot of different stocks within them. So let me know what you guys think. This is just my plan. I'm not a financial expert. Let me know what you guys think and what your plan is. All right. Have a great day.